All right, guys, what's going on? Good morning. Welcome to Wednesday Morning in Trading. You're joining us live with myself, Huddy, Dom Master Mateo, and Roland Wolf. A little bit about us before. You saw a disclaimer on the screen. The disclaimer just notes that, we're not professionals. This is not stock advice. It's not recommendation to trade the stocks that we may trade during this episode. Again, we're not licensed professionals. Trading stocks is inherently very risky. We're trading penny stocks. We're trading the worst of the worst stocks. So expect the worst in these stocks, but they are very volatile. They do move very much, and that's why we trade them. Again, everything that we say here today is just for educational purposes. It's not recommendations to go buy or sell stock. What works for us may not work for you. So we're just, giving our anecdotes, our experience, and, hopefully that helps shape your career with where you're going in stock trading. So today, again, I'm Huddy. That's Dom Master Mateo on the bottom left and Roland Wolf in the middle. We go really far back, us three. We are trading accountability buddies or whatever you want to call it, but we're also friends first. I've known Roland for the better part of 3 years now. I traded behind him for 2.5 years. He's a really good friend to me and a mentor. He's an absolute stellar trader. Really, really good when it comes to sector momentum and picking that really nice low float stock that goes from 2 to 10. It doesn't happen every day, but when Roland nails it, he fucking nails it. Sorry for the language. Dom Master Mateo, he's been trading OTC stocks for the better part of 3-4 years now. I would say that, not necessarily a master. There's still things to learn. We still mess up from time to time, but he's definitely put in the 10,000 hours. He has a really good grasp on OTC stocks, how they move, who's filling liquidity, where to get in, where the best risk reward spots are, and how to really analyze a chart. And we hope to impart some of that information on you. Me personally, I'm just a jack of all trades. I don't do anything really that well, but I know what I do right, and I know what I do wrong, and I stay away from everything I do wrong. That's probably the best part about my trading. I'm really good with familiar charts. I'm looking for familiar daily charts that we've seen on all the best DVDs. All three of us are pretty much crafted from Tim Grittani. A little bit of Tim Sykes in there too. Tim Sykes definitely laid the foundation of how to stay alive, how to build your account, and how to cut losses quickly. And then Tim Grittani really tied the knot with the right daily chart patterns. I know for me, a lot of my short-ended trades come from Tim Grittani himself. And I know Roland got started by just taking Tim Grittani's ideas and flipping them upside down and trying them for the long. I mean, that's a really blanket statement as to what he does. But again, a lot of it derails from Tim Grittani's Trading the Tickers DVD. If you don't have that DVD, I'm not paid to do this. I strongly recommend you buy it. It is the textbook for what we're about to trade, for what we're about to talk about. You can't go to college and not buy the textbook. I know Trading Tickers is about $1,000. Trading Tickers 2 is another 1,000. You don't need both. I would recommend just, getting started with the one. But that $1,000 DVD is, for the most part, the reason that I've made, over $1 million trading penny stocks. So big shout out to Tim Grittani. And the reason I mention him is because, again, it is the foundation for how we trade. So, without the textbook, you're going to be lost. That's kind of our background story. I'll tell you guys a little bit about me since I'm the one talking right now. I've been trading for the better part of 6 years. I got started when I was in college. I was doing trading in the morning, sports in the afternoon, class in the night. And I was able to fit that in my schedule. In the morning, I was basically just trading, morning patterns, right? You have to trade what your schedule allows you to trade. So where I gravitated towards was first red days. I realized that first red days had a really nice morning plunge in the morning to take advantage of the volatility. And I could nail and bail. I could make my money, close out my position, and go to class, $1,000, $2,000 richer. And that was really good to start. That was college for me. Don, what about you?
Yeah, I've been trading for 5 years now. I found some consistency after 10 months with OTCs. That's back when marijuana was running and a lot of these, medium priced OTCs were going really far. And, you had that whole penny stock framework. You had the breakouts, you had the first red days, you had the panic dip buys and the first green days. And that's really where I, built my arsenal of trading strategies. Been, ups and downs along the way. Have worked more into the listed land and NASDAQs and trading primarily the same patterns, just different nuances within them. And, learning to scale up along the way, take on more risk, but really just, using my risk reward and trying to maximize that with a medium to low win percentage and try to take advantage of big moves and, try to get the most meat that I can. Roland, why don't you talk a little bit about yourself, and then we can kind of do a little stock therapy on you and your trading for the past months, year or so.
Yeah, so Roland Wolf here. A lot of you know me, a lot of you may not. But I've been trading since 2016, and I'm sorry, I'm actually doing a watch list for my students right now, so I'm actually kind of multitasking, which I'm not. Us guys aren't the best multitaskers, but yeah, I've been trading since 2016. Started with Tim Sykes as well, and kind of like Huddy mentioned. Sorry, one sec. I am really not good at this. Anyways, started with Tim Sykes. Tim Grattani's DVD, the first one, Trading Tickers, is what really kind of turned everything around for me. That mostly, but a lot of it was an attitude shift. That was kind of the first step for me. Kind of floating around, just trading nonsense, not really know what I'm doing. And then watch Trading Tickers. But the main thing was an attitude shift that, like, I got to work my ass off. That was back in late 2016, beginning of 2017. And that's kind of all she wrote. I went on this, like, unceasing study quest of obsessively trying to figure this game out, which brought me to here today. And just like,
yeah, and I think that's definitely part of the secret. Like amongst all of the millionaire traders that I know, like, everyone eventually obsesses. They're like, it's either this or nothing. You've already put so much time into it. You've already done the F off stage where you're randomly trading, you're randomly taking it seriously, you still treat it as a hobby. And then there comes a point where it's like, if I don't get this sooner than later, I'm going back to that 9 to 5, which in my idea was always the scariest thing and I'm sure for all of us. So you just eventually light a fire under your ass and you say, hey, like, I got to be more disciplined. I got to be more focused. I got to actually know what I'm trading. I cannot take this as a gamble. I cannot take this as a casino. Like, there's real money to be made and there's real money to be lost. And you have to understand both sides of the equation and treat it like a professional. And Roland definitely, you definitely do. You definitely know what you like to trade and what you don't like to trade. And you're never been one that's been undisciplined or unfocused to just randomly trade stuff. I mean, it's not like you treat it like Monopoly money or anything.
No, it was, and that is how it was at first. And that's how it is for everyone at first. And some people never get out of that. Some people never get out of the randomness and just chasing shit. And I think that's a goal. That's always been my goal when I'm teaching people. I know it's your guys' goal to help them get out of randomness and just like help them find process, help them find consistency, and help them find their, kind of where they fit in. I remember talking to Dom, like, back in the day, and he was crushing OTC. I think he was up 50 grand or something like that. He was crushing OTCs, and he came to me for some help wanting to trade listed stocks and stuff. And I'm like, okay, we'll work, let's rock. But I'm like, don't just stop trading OTCs. Like, whatever you're good at, you'll figure that out, like, through your data, and over time, you'll see exactly where you fit in. And you don't want, like, if you're able to take money from a certain part of the market, you want to stay there for the most part. I mean,
yeah, we coined it, like, you don't want to, like, build upon your weaknesses. You want to strengthen more your strengths, like 100%. Don't, just because you're bad at something doesn't mean you need to work on that. Actually work on you're never going to turn your weakness into a strength, but you can exemplify your strengths into greater strengths. And that's kind of what we've been talking about in the past couple stock therapy episodes.
Yep.
So
let me, yeah, I'm going to finish my watch stuff. If you guys want to just go ahead and talk really quick.
Yeah,
we'll get into my stuff after.
We'll talk about our favorite patterns, what's been working for us lately. You kind of know a little bit about us now. And then as market opens, I know, Roland, you've been taking a lot of time off. I know you were traveling with the family in the middle of August. The market, it isn't like full force like January, February right now, but it is kind of active. We're seeing 100% runners, pretty much every day now, multi-day runners. So there's definitely opportunity to be grasped, and easing your way back into that madness is always very tough. I'm sure, Roland, you've gone through it. I know I went through it when I came back from Europe, my Europe hiatus. I was in Europe for 2 months, and coming back does have some problems and some hesitation issues that I'm sure that we would love to talk about and everyone would love to hear. But before we get into that, Roland is making his watch list right now. So I think it's a good time to talk about Dom and I's favorite patterns that, we like to trade, what's working for us right now. I can talk a little bit about Roland's favorite scenario because I've just seen him trade it so many times. And then we'll see what we're watching for today, what's on our watch list. and then get into live trading. Eventually in this episode, we do want to open it up to questions. We do want to hear from you guys. Like, we're going to go over, what Roland's been battling with or what he's been doing really well, whatever he wants to talk about. Same with me and Dom. We'll talk about those similar things. And then we're going to open it up to the chat room. Again, stock therapy is usually about bringing the community together. It's always a thing where it's like trading is alone, but we all go through the same emotions. We all go through the same thoughts. We all go through the same like ups and downs. And whether you're experiencing alone in your room right now and facing your computer screens, or you're listening to us talk about it, like we've all gone through it. We all have the undisciplined moments, the emotional moments, the P&L moments, whatever they are. The lack of patience, the too much patience, the inability to cut risk, everything that you could think of. Like, we've gone through it, and we have experience to talk to you about it. So that's why we're opening it up to chat. We want to hear what you guys have to say, and we want to expand upon and maybe have a good lesson for everyone to talk about in terms of the emotions and the mentality behind trading. Because I always say, like, a chart pattern I could teach to a fourth grader. Okay, it's a simple IQ test. But managing the trade once you're in trade, that is not something a fourth grader can do. A fourth grader can't handle being down $10,000 and still expect a trade to go correct, right? I'm not saying that's the ideal situation, but that's where it gets into, you need to have some kind of maturity, and you can't just be a fourth grader to trade stocks. I'll talk about my favorite chart patterns, and they're pretty similar to Dom. I think the person that differentiates us the most is Roland, but I know Roland doesn't really have a pattern. He has like a scenario, and we'll talk about that in a sec. It also can be considered a pattern. For me, where I really profit, where I find in my stats, right? I track, by setup, where I'm making money, where I'm losing money. You have to know where you lose in order to find out where you win. Meaning you pretty much have to lose before you can start to win, because without knowing where the losses are, you don't know how to avoid that stuff, right? It's really backwards, it's really complex, but that's just the truth. With most things in life, you don't know you're bad at a 3-point shot until you take enough three-pointers and you realize that you have a 0 completion, percentage or whatever, but your layups are on fire. So you got to focus on the layups, that kind of analogy. So I really like breakouts. I like breakouts, and I like first red days. That's kind of where I thrive. I really like OTC breakouts. I find that the price action is really easy to handle. The risk reward is really tight and good for maximizing reward benefits. And I also like first red days because they make so much sense to me. For me personally, I have a really hard time buying penny stocks. Like, I know I'm buying the worst stock in the market. So it's like hard for me to really want to put a lot of capital towards that. I know how much risk is entailed with buying penny stocks. But when a penny stock runs, let's just throw out random numbers, 1,000, 5,000%, I know that there becomes a supply and demand imbalance where there's, so much demand that brought it up here, where it's like, who's left buying this piece of crap penny stock up 5,000%? And on its first red day, you have that massive trend shift where, the buyers know to sell and the sellers know to pile on. And you just have so much more supply than demand that the stock tanks. It makes sense psychologically. And that's why I always gravitated towards first red days. It just made a lot of sense to me, where there'd be just so much supply that you have a downward move to take advantage of. I'm not saying the stock is going to zero. I'm not saying like piece of crap stocks can't go much higher. But there is one day that I know what to do, where I can predict downward momentum. And that's what, built my first $100,000, $200,000 of profits. All I did was trade first red days. And then I started branching off and talking to other traders that I respected, mainly Dom and Roland. And I started asking them about, how do you guys trade listed stocks? How do you guys trade breakouts? I also talked to Gritani a lot. And they really helped, fine tune my criteria to an extent where, not every single stock that's moving I can buy. I really know a very specific scenario that I want to trade. So that's me. I love breakouts. I love swinging them overnight. A lot of the times that's kind of my goal. I get amped about that gap up and spike type idea. It just gets me juiced in the morning, and sometimes that's not always the best thing to wait for, but it really is a lot of fun to wake up to a 100% gapper. I live for that. And first red days, we saw on AETR the other day. I posted it to my Twitter, just a phenomenal overextended gap down straight from trading tickers. It doesn't get more textbook than that. Dom, you want to talk about what you like to trade?
Yeah, and I think off of what you just said, I think that should be like your number one goal when you start off on this journey to become a trader, is like to find out who you are as a trader, because it's going to be different for everyone. It might take you a month, 3 months. It took me 10 months. Like, to really and also what we said, going back to what we said at the beginning about taking this serious and being a professional, like using that period of time to figure out where your strengths are, and then learning how to maximize those and pull money out of the market, and doing that and adding layers onto that as you go each year. And so for me, it took 10 months to figure it out. And for me, that was OTC breakouts. For, a year after that, I only traded the pattern OTC breakouts because, like Roland said, I was able to make money there, and I shouldn't necessarily, I have that curiosity to learn more and to add new patterns to my arsenal. But what's important about that is, like, if you're able to get some money out of the market, keep milking it for as long as possible. And that's what I did until, like, those dried up a bit. And then I had to add new strategies. I had to open up a shorting account and learn how to short first red days in the listed market. I had to, use first green days differently, reversal patterns, and trade those in the listed market. But I'm off of what he said as well. I'm looking for that very small, predictable period of time where I know I can make a decent, 10, 20, 30% relatively quickly. And that's why I don't really trade like big gappers. That's why I don't really scan pre-market, because I'm not interested in these, which I know Roland is, these day ones that are popping up on everyone's radar, because, that's
Roland's
just too.
A master of his scanner, by the way.
Yeah, and that's just too much for me. Like, there's too much unpredictability for me. So I'd rather wait for it to go on a run, get extended, obviously have, a first red day, like where I don't have to think too much about it. Just technically it needs a first red day. And then, a stock pulls back and sets up, consolidates underneath those highs. And then it's obviously going to be a breakout for me. I'm waiting. I want to react to the price action once I get a feel for the stock and use that to my advantage. I don't want to be predicting, is this low float runner going to be the one? Is it going to be that black sheep? That's not really my specialty. My specialty is letting them set up and then, using those predictable parts of the penny stock framework to my advantage. So Roland, I don't know if you're done. If you want to go over kind of your patterns, how you play these stocks.
I could do Roland's patterns. You had to correct me if I'm wrong.
So there's a lot of things that I do, but generally speaking, I am trading the morning gappers. I'm trading listed morning gappers. Generally speaking, I like them best when they're fresh. So not a stock that's been popping recently, but something that hasn't been on the radar. A stock that's been fading perhaps for months and months. And then it's the first day they maybe put out a PR and they're gapping. Generally speaking, I gravitate towards lower floats for the simple fact that they are more volatile. For those who don't know, lower floats, that's the amount of tradable shares out there for us to trade. And it's simple supply and demand. The lower amount of shares there are to be traded and the higher amount of volume, generally speaking, the more volatile the stock's going to be. That has stayed true throughout my entire career. So there's nothing I'm changing about that. Generally speaking, I'm looking for low floats. Big ass floats move slow. That's why really big caps are more stable, because generally speaking, they move slow. I'm looking for fast moving NASDAQs. Generally speaking, they're NASDAQs. So looking for something gapping in the morning. And then I'm looking, generally speaking, for a reversal in the morning off lows. This morning we have INDP, SON, Mosey. We've got a couple stocks gapping on volume. These are the kind of stocks that I'm looking at. Mosey has a lower float. They've got some news. But first of all, let me preface this by saying everything that I do is based on the markets themselves. So I'm in other words, my favorite pattern, my all-time favorite setups come and go. And there are many times where I'm not playing them because they don't work. But generally speaking, kind of like Huddy was talking about, how a lot of what I'm doing in the morning doesn't necessarily fit into a pattern. I call it gap and crap reversal. So there is some pattern to it, but essentially I'm looking for lows to hold. I'm looking for a stock to gap, maybe spike a little bit, but most of the time just pull. Either way though, small spike or a pull in the morning fits this criteria on a gapper. And then I'm watching for lows to set. I'm watching for shorts to come in. Maybe people are going to reshort highs or reshort the open price or whatever else it may be. And then I'm looking to squeeze those people. So the people who are shorting out the gate, the people are shorting maybe lower highs or something like that. But the goal for me is to get a great entry, with good risk reward. The problem most people have trading NASDAQs in the morning, they're not able to define risk reward because they're just like buying morning spikes or just like buying random things. For me, I let a stock pool, consolidate, or set a higher low or something like that, and then take my position with set risk reward reward generally speaking being high a day and risk being low a day. And it's really simple when I put it into that context. In theory, lately it hasn't been as easy for me, and it's probably awesome that I'm on here. We can talk it out with two of my good buddies, but that's the gist of it. And the idea did come from trading tickers, because I realized most of my entries were coming in anticipation of high day breaks and stuff like that. And I found, and this was early on, and I just had such little success, or even breakouts. I wasn't really sure how to play breakouts, so I'd play them, and then the second the breakout level would break down, I was out. And a lot of times I'd get shaken out because I didn't understand risk reward. I think that's one of the most important things that new traders can try to strive to understand is risk reward. Yeah. It is the theme that will take you from nothing to something. Like, it is the theme that will enable you to grow over time, even having a losing percentage of winning trades, or even having less than 50% winning trades. If risk reward is good enough, you don't even have to win 50% of the time to make money in the markets. And that's what people don't understand.
You also don't need big percent gains. Like, no. If your risk reward is tight, like, the percent gains don't matter.
Yeah. And the key of that is keeping that intact over time, as long as you're always finding setups with good risk reward. So that was kind of the idea behind it. I found that when we have a fade, like, I can buy risking low a day or something like that, and have set risk reward. So if a stock, fades a buck, or fades 50 cents out the open and I'm buying it, I know I have 50 cents upside off the lows, potentially. That's kind of how I use it. There's a lot more to it. But gap and prep reversals in the morning, I'm looking for these gappers to reverse, get sweet risk reward, and then potentially break high a day and become that day's biggest runner. That's the key. Other than that, I do love OTC breakouts. I haven't been trading OTC since March or so. But OTC breakouts and dip buys, like when OTCs are hot, it's one of the best places to be, period. Especially with small accounts. There's no better place to grow a smaller account than OTCs when they're hot, or just in general. They're cheaper. They move thousands of percentages, like you were saying, at times when they do. And it's just they flow a little bit better. It's as opposed to NASDAQs, which we'll get into in a little bit, have been so choppy for months and months and months.
Yeah, so we'll talk about a lot of that stuff, especially we'll get back to your strategy, the risk cap and crap. I know there's a lot of nuances that you just briefly brushed over. We'll get back into that, as market opens. Market is opening in 2 minutes. Dom, I know you had ILUS up on this chart. If you want to talk about, why we're watching that, what we're looking for, that's kind of our only watch at the moment. It's my watch as well. There's not a ton on my watch list, but ILUS is one of the stronger OTCs in the OTC market. Someone just asked me to explain what the OTC is. That's the over-the-counter exchange. It's just basically like baby NASDAQ. It's like for companies that don't meet certain requirements to uplist to the NASDAQ or the New York Stock Exchange. So they're on this crappier exchange that, you don't have as many regulations to be listed. And so, yeah, you're dealing with absolute piece of crap stocks. A lot of them will never be anything. A lot of them will go to zero. But a lot of them do get manipulated and get pumped really high. And that's what we're looking for. We're looking for that volatility. We're not believing in the companies. We don't think TSMP is going to be the next Venmo. But, if TSMP is going to go from 4 cents to $2, we want to be a part of the party. We like to party. We like to party with the stocks. I hate selling stocks because the stock, then I'm done with the party. Sorry, that's a weird analogy. But Dom, why don't you go over ILUS? I know this is kind of your specialty. I know we've been watching this one. It's been part of Stock Therapy episodes for like 2 weeks now. I know I made a killing on it, buying it in the 10s and selling it in the 18s. I know you were buying it in the 7s, and now it looks to be setting up again in the 20s. So go ahead.
Yeah, we've really been pretty spot on with this one since this initial run. Last month, a month ago. The whole premise here was let it spike, let it consolidate, give me some sort of range, some sideways price action, and we'll buy those triggers, risking those lows, taking advantage of that risk reward and seeing if the stock will break out and continue. And right now you've had, 2 really good scenarios. And the big thing we kept saying was, we were playing inside of this range using these previous highs on the chart. And, from this breakout, we were saying, maybe it can test this resistance up here, 12, 13. Then when it broke over 12, can it test this 16 to 18 level? And, here we are. And we said, from the beginning, the greatest play that we could get out of this is if it could consolidate up, around these highs, 18 to 20. And, looking back on the chart, I don't think there's much going back. This could be like a huge breakout. And so right now, like in an ideal world for me, like I don't want to just say I want to buy it over these highs because that's killing my risk reward. In a perfect world, this sets up for today, maybe tomorrow, another day. I wouldn't be upset. It's taken days and days, maybe even a week recently to go and break out. So if we could have another higher low off of this panic to get set and then some really nice sideways action underneath these highs, I would just be
through the moon.
Yeah, so excited.
What you guys have to understand is like a lot of times like we pinpoint these stocks that we want to trade, but then they have to construct, they have to develop, they have to form a picture, a pattern in order for us to say, hey, the risk reward makes sense, the entry makes sense, the risk is clear, and the expectation is clear. And once we can actually piece all those things together, then we have a trade. And a lot of times it's being patient enough to allow that picture to form and not just stabbing because you think it might or it might not. You really got to know. And honestly, the hardest thing to learn in the beginning is patience. How do you take your hand off that mouse and wait for something to be very familiar for you to trade? And in the beginning, that's very tough. And even towards the middle of your career, like that's still very tough. It's something that like, they have the 10,000 hour rule with Malcolm Gladwell, or just like trading the same setup 1,000 times. Like I know Dom has traded 1 million, and that's an exaggeration, but a lot of OTC breakouts. Like he's really focused and honed in on his skills with the OTC breakouts. So he really knows what to expect. If he takes that same knowledge and applies it to a listed breakout, it doesn't actually work the same way. So he's really honed in his focus. He's not just trading breakouts. And I'm sure he can trade a listed breakout, but where he really exemplified his focus was in the OTC markets and waiting for that correct OTC action. So ILUS, yeah, definitely. Looking like a 52-week high day, 52-week breakout, has been pretty much the strongest runner in the OTC market. It's got a ton of volume, it's got a ton of volatility, and it's setting up well right now. I mean, it's setting up in a very tight range around 20. It looks like 20 is going to be that trigger when it happens. It's just a matter of letting the risk form in the meantime. And right now, it looks like it could go either direction. Is it going to pull back for a couple of days and then break out, or what's it going to do? We don't really know yet, and we're just waiting to see what happens.
Yep, exactly. Right. Roland, is there anything you're watching this morning for a play?
Dude, I'm having all sorts of issues this morning, man. I'm having broker issues right now, just trying to get logged in here.
So, you brought up brokers. We can talk about some of our favorite brokers. I know it's a common question. It's a common question I usually get. Just real quick, I could probably name it for all of us. I know that all three, I think, Roland, you use Schwab for charting, and then E-Trade for actually making the trades, right?
No, I trade from Schwab as well, and then I also have a Trade Zero account and a Speed Trader account.
Cool. I have a Cobra account as well as a Guardian account. The reason I have two accounts, those are both short selling accounts. The reason I have two, it really applies right now. You got to play the broker game. If you're a short seller, I know a lot of people probably here are not short sellers, but there might be one or two short sellers. If you guys are gravitating towards that side of the equation, you really got to play the broker game. I know that certain stocks are on the reg show list, which means you're not able to trade them at certain brokers like Cobra and Speed Trader. And currently, I believe Centerpoint, I'm not talking from personal experience, but my personal experience with Guardian, which is the other broker I have, the reg show list stocks are able to be traded. So where I can't trade them on Cobra, I can trade them on Centerpoint or Guardian. So that's kind of like playing the broker game, right? If the opportunity is not one place, it might be somewhere else. And it is worthwhile to have multiple accounts for that reason. You don't need to have your full account in one broker. And sometimes it allows you to ascertain other opportunity by having more than one broker. For longing, I pretty much stick to E-Trade. I know Dom does as well. Really good executions, really good charting software. Not great for short selling, not great for short selling OTCs. So you definitely need to play that broker game again, right? Like having the broker to ascertain the opportunity that you are looking for, that you find profitable and familiar. Some of the stuff I'm watching right now, I have ILUS on the screen. I do think that has the most potential. If I can just sit tight and let that develop perfectly and that be my only, trade for the rest of the week, I'm gonna have a phenomenal week. Whether it's a gain or a loss, like if I just can sit here and be disciplined enough to say, hey, I don't know what to do with most things in the market. Most things in the market is focaccia, it's white noise, it's built to distract you. So like my whole thing is like having that one trade where it's like win or loss, I'm happy with the result because I know in my heart that that's one of my A plus setups. And in those scenarios, if I lose my money, I'm happy. I definitely want to talk about, sizing into plays, consistent risk, how we manage that dollar risk that we lose on our A plus setups. I think that's a great thing to learn, especially as a beginner. I'm kind of watching ILUS right now. Again, not really going to push any buttons. IRNT is IronNet Inc. is the other one I'm kind of watching, although it already feels like the long has come and gone. It looks like a multi-day breakout over the 24 range. Now it's tapping on 30, all-time high breakout. That's that thing again. That's that thing that Dom was talking about. And Roland, where like, do you really want to be buying a breakout where you could be buying the highs and have terrible risk reward? So yeah, IRNT is breaking out at the $30 level, but at the same time, it just came from 25, 24, which looks like a multi-day trigger. So if I'm buying $4 higher, where's my risk reward? Right? It's shot in the foot. I can actually buy up here and actually have meaningful position size. I do want to talk about sizing into plays. It's something that I talked to Grittani about. It's something that Roland's always done intuitively, and Dom does it interestingly. I just don't really understand how his brain works sometimes, but he does things that I don't understand often. But for me, when I'm sizing into an A plus play, I'm looking for consistent risk. And again, it's something that Grittani put me on. I remember back in the day, I was having a hard time sizing into plays. And again, this is a little bit of an advanced topic, but oftentimes when I would have this like picture perfect overextended gap down, this really started happening in the COVID era back in 2020. It would be a perfect, first red day type scenario, very volatile stock. And when the time came to enter, I would, on a $14 stock have like 400 shares. And that might be a lot to whoever's watching this, but imagine, you're in my shoes and you have $250,000, $300,000 in your account at the time, right? Why do I only have 400 shares in a $15 stock? Like I can take on more risk. I can lose more, right? And that was my whole thing. Like I was just always so skittish. I was always just looking to, aim small, miss small. And my account, as a result, grew very steadily and very, consistently, but very slowly. It was like a turtle. And I talked to Grittani about it, and he said, Huddy, you need to take on Project 1K risk. And I said, what's that? And he said, for all of your A plus setups, you need to risk $1,000. And again, that's for me, for where my account was at. You got to figure out that number for you, because sometimes you do take more than one loss. Sometimes you do size in aggressively. There are bad things that happen. So definitely figure out that loss number for you and make sure it's an appropriate number that you're okay losing. Because one of the things about trading stocks in this market is like, you're going to lose. You cannot be afraid to lose. Like it's a game of odds. It's a game of statistics. Nothing's 100%. So again, Grittani put me on this mission to find that dollar amount that I can lose on all my A plus setups. And, regardless of my account, it wasn't some percentage of my account. I had, a lot of money in my account, but $1,000 was the amount that I could lose once, twice, maybe even 3 times in a day if I had to try 3 different trades and still end up sane. Like I could sleep at night is the word I'm looking for. Where if I lose 5, 10, 20,000 in a day, I want to throw my laptop against the wall and shatter it into millions of pieces. So I had to adjust to what was right for me. Even though my account can handle a lot more than $1,000 risk. And for 9, 10 months, I sized into every single play that I thought was A plus to my risk level. So before I got in, I knew my entry, I knew where I would get out if I was wrong, and I made sure that I lost $1,000 every time I was wrong. And that helped me size into the best of plays, and that helped me see risk reward for what it truly was. Because the closer and closer I was to that risk level, the more size, the more equity I could have in the stock, at the same time, still losing $1,000. Now, you have to be aware that there are times where your stop loss, maybe it's not manually put in, so the stock's going to blow through it. You're going to lose a lot more than your intended $1,000 risk. That's totally fine. Like, crap happens. That's that saying. You just be aware that, bigger losses do happen because, we're dealing with such in the moment stuff that wild stuff does happen. But the premise of the idea is like, okay, size in with that $1,000 for me, size in with that $1,000 risk, and then see what that risk reward benefit is on the opposite side. So sometimes, if I'm risking $1 a share on a stock, that's 1,000 shares. But if I'm risking 10 cents on a stock, that's 10,000 shares, right? It doesn't matter how much money I'm putting in. It's the literal dollar amount from my entry to the risk that I need to size into $1,000. And I stayed at $1,000 for 10 months. I had a $100K month with $1,000 risk. I had a $200,000 month with $1,000 risk. So you don't need, a lot of money to make a lot of money. That's one of the big things I learned in my sizing up career. I used to just, I thought like my account was big. So I just started taking really big positions, like all in type scenarios. And I would lose $10,000, $20,000. And I would not make anywhere near the amount of money I started making with $1,000 risk and focusing on risk reward. So that was a big shift in my trading. It definitely helped me get to a point where I could size up, but in a methodical and strategical way. And I wish I could teach more people this. I wish I could, talk about this more. I know Grittani made a YouTube series where he was actually sizing in too big and blowing up his accounts, losing, multiple six-figure losses. And so he went to YouTube and he documented his trading career where he was like, hey, I'm, sizing down. I'm going back from 10,000. He does $10,000 risk, and he sized back down to $1,000 risk and slowly edged his way back up to fix his big loss scenario. It's a great YouTube series. It's absolutely free. Just look up Tim Grittani monthly recaps. And Grittani told me to do the same thing. He instructed me to watch those and kind of emulate him and I had the opposite problem. Grittani was sizing in too big. I was sizing in too small. And that's really helped me. Since then I've moved my $1,000 risk. It's now near $2,000 risk, roughly a year and a half later, to give you perspective on how long I stayed at $1,000 risk. Yes, the gains seem small, but when you're hot, when the market's hot, you can really start moving the needle with just not a lot of money at play. You really don't need, $50,000 in a stock in order to make a healthy profit. In fact, a lot of my big gains in 2020 were with, $10,000 to $20,000 positions, which are still pretty big, but it's not unreasonable to have that much money in an account and utilize it correctly. So that's my whole thing on consistent risk and stuff. Do you guys want to talk about what you're seeing on the market? I'm not really watching.
No, I want to add to that real quick though, because it's important.
Good.
In terms of sizing, like, notice he didn't say he wasn't saying he's risking $1,000 on every trade. He said he's risking $1,000 on his best setups. He's like, it's important that for at least the way I trade and the way I like to look at things, that I am risking less on less good setups for the most part, if that makes sense. It needs to be kind of more of a scale. The way I look at it is that I want to risk the most on the best, highest probability setups I know. That's when I want to really put my chips on the table and put my balls on the table.
And Roland, and I'll even add to that. If you don't feel like risking the full amount that you do on a great setup, you probably shouldn't even be taking the trade. Like, I've gotten to the point like now where like I used to, like, I had to be in something. Like, there's no way I could sit here at 9:30 like I have today and earlier this week and not even tried to make a trade. But like, I'm so disciplined now that it's like, I know that there's stuff setting up for like, I have my ILUS. I'm looking at some first green dates potential. Like, if I don't feel like there is a really good setup that deserves, like, let's call it $1,000 risk, whatever your max number is, then you probably shouldn't even take the trade, because those gains aren't going to be good enough to, like what we talked about, risk reward, cover like 5 losses. Like, that's not possible. So I'd rather just wait and like keep my mental energy until those, A++ show up.
Yeah, no, I totally agree. But for me, there are times where like there are no A++ for a while. And then that just happens. Like, there just aren't always A+ plays. So for me, like, and I have a very similar attitude. I've had to come off of that attitude over the last couple months of being so disciplined and not trading shit that doesn't set up for me, because I had nothing to trade. Like, in other words, I still got to make money. I still got to feed my family. So just because something isn't set for me personally, if something's not setting up 100% perfectly, but maybe 80%, 70% of what I generally like to see, maybe the catalyst isn't the best. It's maybe the markets aren't necessarily the best. My A+ setup can come in a shitty market and then not yield what it, even close to what it would yield in a great market. So I keep that in mind. I keep in mind that the markets are changing, and just because my A+ setup's there, I still want to hit it. I just might have to hit it a little bit differently depending on what the overall markets are doing.
No, I think that's like super important, because like this summer for me has been super slow with OTCs, and this happens like every year at some point. Like, they're super cyclical, and when they're not there, like, there's still patterns. Like, ILUS has been here. We had, what was it, TSOI. There's been like one decent one a month. but they're different than like a hot OTC market where all the breakouts are running each day without going red. Like there's been little nuances that have changed, and I've had to adapt to those. Like they're still my bread and butter, but I'm not playing them the same way. And maybe Roland, you want to go over like what like a perfect market is for like your setups, like these first green day like gap and crap reversals, like when things are firing on all cylinders, what does that look like? Is there differences in the daily chart? What does the similarities look like that like you want to attack these differently?
Dude, it comes down to are stocks running or not for the most part in NASDAQs. And when I say running, like 60, 70, 80, 100% in a day. Like when the NASDAQ markets are hot, you get at least 100% runner or multiple ones every single day for like weeks on end. It's like, it hasn't been that way for maybe 6 months. It's been, and I think it's kind of the same with the OTC market. We had at the end of 2020, well, from when the pandemic started until basically February of last year, we saw some of the craziest action I've ever seen. So first we had a big crash. We had the big market crash in March, I think it was. And since then, everything's gone up, but it culminated in January and February in both the OTC market and the listed markets. Every single small cap stock went crazy. Every single one, basically. Every single OTC ran like thousands of percentages for the most part. Every single NASDAQ. And I was so concentrated on the OTCs because it was like Candyland there. I wasn't focusing. I wasn't even scanning. I mean, I was scanning, but I wasn't really playing NASDAQs. All of those went up too. So January, February of this year, we saw the biggest, craziest micro cap, small cap, penny stock spikes that we've ever seen, ever in the history of the market. That's a fact. If you look at the volume and you look at all the charts, there's never been anything like what just happened. I think that we're seeing the lull from that still. It's been a long kind of lull because everything got so overextended, a lot of it for no reason whatsoever. So I think that what has made the trading tricky over the last couple months was we have all these bag holders from January, February still, new investors, new traders who are just holding bags. A lot of stuff, I think a lot of overextension from January, February, and that's kind of the effects. So I've actually struggled a little bit because of that. I don't like playing stocks that have recent overhead resistance. Okay. When I'm trying to go long, that's one of my criteria. Like I don't want something that just ran big on volume, because that means there are going to be bag holders. It becomes a supply and demand issue. It sets up levels of resistance. People are going to be shorting on charts. It does a lot of things to a chart once something's gone parabolic. Like you saw, like some of you maybe who haven't been trading, but some of you maybe know crypto and Bitcoin ran to 20 back in 17, 18, and then took a really, really long time to get back there. It took like 3 years. Yeah. So it's, and when as far as penny stocks are concerned, most of those are never going to get back to those highs, as far as I'm concerned. So that has what has made it kind of a difficult environment, I think, over the last couple months for a lot of traders who trade listed stocks and OTC stocks, but mainly what I deal with is the listed, and it's been a difficult environment because of that. But I kind of diverged, but to get back to what Dom was saying, I like when it's like macro driven small cap stuff. So Huddy was mentioning sector momentum earlier. That's been one of the areas where I've made most of my money in the markets in chunks. Whenever it comes, I can make a ton of money from sector momentum anytime it comes, because what it does is it gives you a wide variety of stocks to play. And it's not just listed stocks, it's OTC stocks too. And that's what's great. Like generally speaking, like Corona, we saw it last year, obviously Corona stocks, but then there were like food delivery stocks, IFMK, a couple other grills, some of the food delivery and food prep services because everyone was sitting at home.
WTRA, JPRN.
Boom. And then we had obviously the Bitcoin plays. We had NFT plays now. We have Chinese plays. We have educational. There are all these different sectors. But that hasn't been hot recently either. So it's been one of those things. It's been a tougher environment for me. And I'm just sitting around doing what I'm supposed to.
I think you nailed it on the head. Like we had such exuberance for 3 or 4 months, from January to March, that literally the charts got mangled. We put so much resistance, so much overhead supply into all these piece of crap tickers that pretty much any kind of momentum you saw in any of the tickers that ran in the past year ran into serious, resistance, and it stops momentum. It literally, they run into supply, they run into sellers. So your percent gains are not great, and you don't know when to sell, and then they just crash on you, and you take a loss. And again, a lot of it, like, Roland started this whole thing with, like, he's looking for a fresh chart. And unfortunately, like, there was literally no fresh charts left. Like, literally, I think at one point there was like 9 stocks like underneath $1, and then one day there was like maybe 1 left. And the micro cap stocks, like, that were still underneath $1 on the Nasdaq. That's how crazy.
It's great talking about it, because, like, if you look at what has ran Nasdaq wise, I don't know how much you two have been following the Nasdaqs, but if you look at what has ran in the listed market over the last 2 months, it's basically IPOs and like some SPACs and some mergers that change their names so they get fresh charts. That is what we've been like. Seriously, what was last week's? It was EFTR, I think.
Yeah, all these like.
Look at EFTR. Go to the daily, fresh chart, for the most part. It was a merger news, but that happened. It's been stuff like that. INDP today. Go to INDP. INDP, same thing. Fresh chart. That's kind of what we've been seeing, and I don't really haven't been able to find too much rhyme or reason to these. They're being pumped super hard by some of the big chat rooms, which is another thing that you guys have to understand that's happening, especially in the listed realm. OTCs get pumped as well, but in the listed realm, we have these, obviously Wall Street bets. Then there's like the Atlas chat room, which has like hundreds of thousands of people in it. And there are these big free chat rooms or paid services that are just pumping these stocks massively to a bunch of noobs. And that's a lot of what I've been seeing in NASDAQ too, which I don't like trading those ones either for the most part, unless I get a great entry. So it's been a more difficult environment, and I've been troubleshooting for the last 2 weeks or so since I got back into trading consistently.
So I know, Roland, your specialty is, again, it's a reverse gap and crap scenario. So the stock gaps up, it's trading a lot of volume, it's got some kind of good news associated to it, some kind of FDA approval phase, something. He's looking for a stock that's strong, has a good catalyst, and has volume. Preferably, it's a lower market cap, so you're going to see that $1 to $2 range. That one hold spike to 2 is kind of what he's always coined in his head. And again, it is very driven on a macro sense. It is very driven on a premise that, like, we've had prior runners, and now there's reason for this to run. A lot of day trading is psychological.
Quickly. 1 to 2 was like my favorite thing back in the day when we traded together. That was like the greatest thing ever, because 1 to 2 was amazing. It's 100% gain. You could take a shit ton of shares. But because of what happened in the markets over the last year, there are like no 1 to 2s. We've gotten a lot of fades recently, finally. Gotten some stocks back under $1. CEI just went from whatever 30 cents to $1, almost $2 basically.
1 to 2.
But that's what I've been like on it, and I think I did say this back in February and March. I gotta wait now for these stocks to fade back, because I think it's finally starting to happen now that I'm looking at my scans. I'm finally starting to see cheaper stocks again. But I'm telling you, for 3, 4, 5 months, I saw almost no stocks under $2, and I saw no stocks under $1. None. Listed wise, none.
And that makes it a very difficult trading environment, especially for you. Like, what you're used to is no longer there. So how do you adapt? And it's either
I've had to adapt by trying to trade higher price stocks. Like, I never used to scan for stocks over $10 because I didn't like playing them, and they weren't very volatile. And just based on my scanning over time, I realized the only stocks that gained 50 to 100% in a day were under $10 for the most part. This was like traditionally prior to 2020. 2020 changed the game, and COVID changed the game. So, and stimulus checks changed the game, and lockdowns changed the game. We had millions of new traders over the last year, where we were used to just dealing with, kind of a very small niche of people that we were able to take easy advantage of. And you can still do that, but now we've got a lot different things. We didn't used to see like algorithmic trading so much, or hedge funds really deal in stock, small cap so much, and we're seeing just a lot more different things now. So I'm adapting, and you have to adapt. That's the only, you adapt or you perish. So it's the only way to do it.
Roland, do you
I think
have
it really
any?
comes down to like that's where that $1,000 risk comes in. Like if your setup isn't there, if things aren't working for you, then like you don't have to take $1,000 on any given setup. Like it's like I said, like it's your A+ setup, right? So if Roland's got to figure out like higher priced stocks, like he's not going to go in with the same size where his $1 to $2 familiarity is, right?
No, I've had to size so far down that it makes me uncomfortable. Like how small my size has been, like recently, it's been very small, and that is just me protecting myself. And that's what you guys have to understand. Like the ebbs and flows of trading, it's not, anyone who's banking every day is lying for the most part, the way I see it. It's not that kind of game. There are going to be days, even weeks, where you're going to struggle. And yeah, so that's, for me, it's about like when I get into uncomfortable scenarios, I size down. Until I become comfortable enough to size back up on any given. I'm not going to just go balls to the wall on something that I'm not familiar with. I'm like a small fish out of water when I'm looking at these stocks, like INDP. I'm not out of water. I know what the hell they're doing. I've been doing this a long ass time. But in terms of like my strategies and how I like to play, I don't see anything there for me. You know what I mean? And so I end up trading random kind of things. And that's been the story. Like if we're talking about therapy, so it's important, and I think stock therapy is the most important thing anyone needs to do for themselves. Like personally, every single day, it needs to be self-therapy. Like the people in here are lucky enough to hear from people who have a lot of experience and success doing this. Like me and Huddy sat next to each other all day for a year, basically doing this, just like talking through our thoughts, trading shit, talking about our trades, good trades and bad trades. And that was I'm sure he can say the same for himself, but that was a great period of growth for myself as well, where we're both like learning. So I like to size down when things get all messed up, and self-diagnosis is what I was trying to say. That's what I've been in the midst of for the last couple months, in terms of trying to figure out where I fit in right now and get my patterns sorted. That's where I've been, and I've been there before, and I know exactly how it works. Like, for example, I had a string of, after I came back from vacation, I had an issue pulling the trigger. Like, I didn't see much. A lot of it stems from January, February in the markets, like I was saying. But I've had some issues pulling the trigger, which has never, never been an issue. In fact, I've always had the exact opposite issue. I need to tame myself. I need to not pull the trigger. That's what got me successful in the first place, was to actually hone, like, you have to trade, like, especially if you're new, you have to trade to get that experience and understand how everything works. But yeah, it's one of those things where I've had to, so like that issue, for example, how I get that question a lot, like fear of losing, fear of pulling the trigger. And I had never had that issue. So I was never able to tell someone how to overcome it or try to help them overcome something like that. But now I have, and it lasted for about a month, much longer than I would have liked for it to be. How did I deal with it? I sized down and just started trading shittier setups. Like Dom was saying, if you're not going to trade a good setup, why would you trade? Well, I totally agree with that for the most part. But for me, it was like, okay, I'm going to trade any setup I see that makes sense to me at all, just to pull the trigger. Really small size, really tiny risk, but just get used to putting myself out there again. And now it's not an issue anymore. That's how I dealt with that, was literally size down, pull the trigger, make sure and set stop losses if you need, keep everything under control. You have to lose. You're going to lose. So that was kind of an interesting period of time, but that's gone now. I have no problem with that. And it's about little hacks. And you're going to have to figure it out for yourself, in terms of like the psychology behind what you're trying to do, because also, that's purely psychological. Go ahead.
And I'm sure a lot of the reason that you were having that hesitancy is because you were probably used to making some pretty big dollar gains in that frenzy that we had. And then coming off that, coming into this market where everything is just, every chart is just absolutely tarnished. like your setup wasn't necessarily there. Your thing where where you know you know you can make money.
And my plums.
And your plums, it wasn't there. And so like you have to make some kind of agreement in your head where it's like, okay, like should I trade this? Okay, if I should I go smaller size because I know it's not as good as it can be. And that would cause hesitancy because you know you're not going to make that 10, 20K that you're used to. You're going to make something like 1, 2, 3K. And that feels very silly after you've made a lot of money. I understand that. That's probably a much more advanced topic than most people in here are ready for. But I would say that like Dom or Roland, your specialty is when like the market truly gets hot and we have sector momentum. What I've seen Roland do like freaking Houdini many times is you have one big runner in a sector, call it the energy sector, the shipping sector. I know you did really well. I know he can do well in biotechs as well. You have one really big runner that kind of ignites the market. And then the next day you have this low market cap, low price stock that like everything is seemingly the same. And then you're doing a reverse cap and crap scenario because you think that has merit to run. And that we haven't seen yet. We haven't seen that scenario.
We had one of those in August. I forget the tickers at this point, but we had a huge runner on a random Monday, and it was SPRT, maybe might have been SPRT that was running.
That was a great one.
But there was a day two, and I missed that, and that's what sucks about the market right now is like, but it doesn't matter. I'm sitting here every single day waiting for that. I'm waiting for that feeling in my plums, and then I'm gonna hit it. And you are right. Half of the reason that I've had hesitancy is because I don't see what I like to see. And unfortunately, that's what's been happening. But it's fine. This is the game. This is trading. Patience. It's a patience game. And I have no problem being as patient as I need to be. I haven't lost money. I haven't lost money over the last couple months. I just haven't been seeing those gains that I like to see.
And another good point right there is like, okay, this is a long-term game. Okay, this is not like a get-rich. You hear it so much. This is not a get-rich-fast scheme. And what that really means over the long run is, and I'm sorry to say it, but like, and augment these numbers for whatever they are to you. But your $1,000 gains, your $1,000 losses, your $100 gains, your $100 losses, your $50 gains, whatever your size that you're consistently losing and winning, that's not blowing you up. Like, over the long run, that stuff doesn't matter. Like that will actually kind of white out in terms of like the long-term trajectory of you. Like the small gains do add up, especially if you're winning more than losing. But at the end of the day, the things that move your account are the big wins and the big losses. The times where you're in a good place and you're actually set up correctly. It's like blackjack, right? Like blackjack, and I hate to relate this to gambling. And I'm not really trying to say that stock trading is like playing blackjack. I think the risk reward benefits and a lot of other situations are a lot better in trading than you get in the casino. But the point in blackjack is like when you get dealt 21, you have a lot of chips on the table, and that's when your account moves. And every time you have, one unit and you lose a unit or you make a unit, that doesn't matter. But when you have like 6 units of a bet on a table and then you hit 21, that's when it actually matters. And the same thing is, for the stock market, like you're going to lose, you're going to win, and they should stay small. They should just, it's part of the course. You're going to win, you're going to lose. Most traders that are decently successful have like a 50 to 60% win rate. So, half the trades that they take lose, half the trades they take win. And the only reason that they are able to exponentially grow their account is because in certain scenarios, they have a lot more chips on the table for when they win or when they lose. I know some people on Twitter that lose a lot. I can name some names off the top of my head that I'm sure you've seen on Twitter that just can't stop losing. That's the opposite of what you're trying to do. You're trying to have the chips on the table when you're winning. And you're trying to figure out how to do that.
Huddy, it's why I think it's so important when things are slow. Like I call it survival mode. I can feel it when I'm like losing trade after trade after trade. Like we want things right now. Like we want our money right now. We want the market to heat up right now. But like if you look at like a year of trading, you learn this the more you do this. Like your year is made up of like probably 2 or 3 really good months, maybe 8 to 10 really good trades. And it's easy to look back and say, oh, I just have to be patient and wait for those setups because they're going to come around some point in that year. The market's going to heat up for maybe a month or two at some point in the year. And it's easy to look back and say that. It's easy for me to go, the whole summer, all I need is 5 really good trades, and that's my summer. That's my income. But sitting here every day watching stuff run, there's so many stocks. It's hard to like stay away, to be patient, to wait for the right setup. But that's why I think it's like I call it survival mode. It's so important to like zoom out and realize, today this whatever maybe I trade randomly INDP or something because I'm not going to trade with any size. Like that $1,000 gain or $1,000 loss is so irrelevant to the big picture of the whole year that it's just not worth my mental capital, not worth the stress. Like, and another thing about Roland was saying with sizing down, like, we're used to seeing those big numbers after a hot market or something, and we get frustrated when they're not there. But pushing buttons and forcing the action with that same type of risk is like, you go through a week and maybe you lose 40 or 50 grand on like, you lose 12 trades in a row. Like, you could have done so much with that money, and like, it wasn't worth pushing it and forcing it. Like, I would rather make zero because that means I lost zero. Yep. Like, it's just those moments, and you go through them like every month or 2 months, maybe 6 months, depending on the person. But those periods are like when you need to, like, you have to keep your money. And it's so hard because you don't really notice it sometimes until it's already happened. Like, maybe you have to sacrifice that 40 grand in a week or two, and they're like, oh, I'm in the deep end here. This is not a good situation. And then you got to go back to your blueprint and, rebuild smaller, get some momentum, and wait for that hot market or those, specific plays you're waiting for. But, that survival mode is super important, and it needs to be as short of a time period as possible that you get through it, because, it just can be so detrimental to everything you worked for in the hot markets.
So, Roland, have you had a favorite trade as of recent that you want to talk about, or has it just been basically mute for you? I don't really know. I haven't been following.
No, I have a least favorite trade to talk about.
That's perfect.
I was an overnight Fammy on Friday.
No.
Yeah.
Yikes.
I lost like 7 grand there.
Oh wow.
Which is I think my biggest loss this year.
Yeah, I mean, so, going back to things like trading penny stocks is inherently really risky. And if you pull up the chart FAMI, you see that, 4 days ago, it was spiking really well into close. It looked like it was going to have this multi-month breakout and a gap to fill to $1. And then what happened is they had an offering overnight, and it was really bad news, and it gapped down 50%.
Yep.
It does, those things do happen. I remember, like, I posted a ticker on Twitter once. I was like long NNDM overnight, and same thing happened. Offering down 20. It wasn't as bad. I was down 25%, but it was like terrible to wake up to.
I think it's been over a year since I've been caught in an offering personally. I've been caught in a couple of them. I mean, that's part of the game. If you're long overnight on micro cap stocks, there are times where there's going to be offerings. Like, this is what they do. In this case, I should have known better. Family's a real piece of work, and they're just complete trash. But yeah. Well,
there are ways
you learn from that. It just is what it is. I shouldn't have been long. I mean, the setup was actually not bad considering what I saw last week, and that's what ended up happening. CEI ran from 30 cents to $1. There's another one, I think CBTR, which was also running the same day as Fammy. So there were kind of some, and I've seen this at times. Like, it's been a long time since I've seen it, but sub $1 stocks running, and yeah. So it happens, it happens.
So you were letting the market kind of dictate your aggression. You saw CEI kind of came from that 50% range. Yep. Family's trading that kind of volume. It looks like it's got the breakout.
Yep. I tell you what.
And again, there are ways.
No CEI last week. No way I was touching Fammy on Friday. You know what I mean?
Right.
And that's a lot of my game is like, and that's what I was trying to kind of explain earlier. A lot of my game is reading the markets and understanding what patterns are in play, what price ranges are in play, and stuff like that. And it's just been it's been shitty for me for a couple months now.
Yeah, and it's big about just letting that setup come to you. I mean, I've seen Roland go through slow moments, and then when he's hot, and like it's part of the cycle that we all go through, and it's at different moments. Just because one trader's killing it doesn't mean that you have to kill it. And like, the most important thing I could like impart to you guys is like, don't compare yourself to others. Like, you are your own trader. It is your own journey. What works for you may not work for others. What works for me may not work for you. Where I'm slow, you may be quick. Where you're quick, I may be slow. It's something that you have to develop over time and understand that about yourself. And also know that the market isn't going anywhere. Like, just because you're slow right now doesn't mean 3 months from now you're not going to be killing it. I remember when I was in Barcelona, and I had come back for a couple weeks to start trading and hanging out with you guys. I was all over the place. I was trading everything and anything because I just missed the action and I wanted to be a part of it. And I was taking like relatively pretty big losses. Like, I could not stop myself from losing like 2 to 5K a day, which, after not trading for 2 months, that felt like a lot of money. And fast forward to September, and I've only had one red day in September, and I'm up, $80,000 plus. So again, it comes in ebbs and flows, and it comes with like, I think the main thing is to keep a pulse on the market, right? Continually always watching, always feeling, always getting like a groove for what's moving, and then finding where you belong. For me, recently, I've been really looking at these big picture, familiar breakout charts in listed world. So we've talked about this in a couple stock therapy episodes, but like CEI, I'm looking for breakouts that don't have a lot of like heavy resistance overhead. So like if you're pulling up a CEI chart, you see like a ton of volume being traded today. And if you look left on the chart, you don't see that much volume traded, in between, 70 cents to $3. But at $3, you do see a lot of volume traded. The other one that we saw that worked really well was ATER, another scenario where, in the recent times, like, in between 9 and 7, it traded a bunch of volume. And if you look left, you don't see really a lot of volume traded in between, $20 to $40. So those are the kind of charts I'm focusing on again. And it goes back to what Roland said, like charts that are fresh, charts that don't have that overhead, charts that didn't necessarily run super hard during that frenzy that we had, and like just put a bunch of volume and resistance up overhead. I know if I pull up a lot of the NFT tickers, you're going to see a lot of volume and overhead resistance if you look left. So like when that sector was running for a bit, that wasn't something I was focusing on because I didn't like the charts, right? And it comes down to a familiarity of knowing what you want to see and what you don't want to see. And having your criteria slimmed down to such a nuance, to such a specificness helps you not trade. I mean, I think the biggest killer for any beginner is over trading, is not knowing where you belong. And unfortunately, yeah, you do have to go through that aspect of trading, but the sooner you can come out of that, focused, the better it is for you in the long run. Because again, like most of the stuff out here is built to make you lose. Most of this game is rigged against you, and you have to understand that coming in. So how do you put yourself on the other side of the coin? And that's a really hard equation to figure out. And all we can do is share what helped us get there, but you still have to figure it out for yourself because it is something that is very personal. And again, like Roland was saying, like stock therapy helps, like, having a wall to bounce off of. I remember when I was in the beginning stage and there was no Roland, there was no Dom, there was no Jack Kellogg, there was no Kyle Williams, Matt Monaco. There was just a Grittani, a Dux, and a Sykes. And there was no one to bounce ideas off of. There was just, you tried trading something, you lost really big, and you just stared at the wall. Like, what did I do wrong? How can I improve? Like, how can I avoid this at all costs next time? I remember those stages very clearly in the mind, which is what brought us to stock therapy. Like, again, just trading behind Roland. And we never traded the same things. Like Roland is predominantly long the first green day, and I was predominantly short the first red day. And those two never coincide. A first green day cannot be a first red day. And throughout the day, we would just talk. Like, hey, what's moving? What's not moving? What worked? What didn't work? Hey, why don't you do first green days? Hey, why don't you do first red days? Always conflicting. We never traded the same thing. But we would always able to say, hey, what's moving? What's not moving? Hey, where are people making money? Why are they making money? And why are they not making money? And just having that outlet to talk to someone about kept us sane, felt like, a whole year passed by so quickly. 2019, it was a very slow market. Like understand that most days we did not trade. Like that does exist. I'm sure a lot of your newcomers, you Corona-born traders don't understand that concept, that there can be a year of no trades. So what do you do in that year to become the better trader the year later, right? How do you build that discipline, that focus, that consistency, that A+ pattern? And again, having an outlet to talk to someone about what's working and what's not working is huge. 2019 was a great year, even if, the profits were, not anything crazy like they were in 2020, 2021. 2019 built us for what came in 2020 and 2021. What you also have to understand is trading is cumulative. Right? Just because you learn something one day doesn't mean you apply it the next day. You got to learn something at least like 15,000 times before you eventually apply it correctly. So that's enough about that. I do see a couple questions as we're getting 45 minutes into market open. I do see a couple questions on the chat rooms. I'm just going to let you guys field the questions. If you guys know how to answer it, if none of you guys start talking, then I'll just start talking because I do that really well. If you could tell your 2016 version of yourself today, knowing what you know now, what would you tell them?
I guess I'll take it. I don't know. It's when you look back, it's kind of weird because you regret a lot of it. Like it took me so long to take it seriously. I gambled for so long, like when I knew I wasn't making any headway. But I feel like so many of those lessons, like everyone's journey is different, and I feel like you need every one of those lessons. Like, but I guess you only need to make the mistake once to really learn it. So I guess, God, I don't know, I don't know. I think I would tell myself, find one pattern and master that before you do anything else. Like, I feel like it took me too long to trade, because I do think there's a feeling out process where you have to trade a bunch of different ideas and setups from other people until you kind of find which one fits you. I wish I had taken less time in that period and like been like, okay, OTC breakouts, they look simple. It's very easy to identify in the chart. There's great risk reward. Like, let's stick to this and only this. Let's track it. Let's figure it out. All the little intricacies to the pattern, master it, and then move on to the next one. That's what I would probably do, because then you would have gotten profitable a lot sooner, and you would have had a lot more money to start messing around with other patterns.
And for me, honestly, my best advice to tell a younger version of myself is like, I remember back in the day when I would see a picture perfect OTC short setup, I would think like, I have to go all in. Like, I don't know when the next time I'm going to see this is. So I got to like bang it out right now, right here. And that was really detrimental. What I would tell myself is like, hey, that A+ setup, it's going to come around. Like Roland was saying earlier, like it's going to come around, or Dom, like 10, 20 times a year. It's going to come around. So, if you miss it, that's fine. If you don't do well, that's fine. If you lose, that's fine. If you take yourself out of the trade prematurely, that's fine. Like, there's going to be another one. So just like relax. And like, if one didn't go the way you planned, the world's not over. It's going to show up again. It's going to show up better. You're going to have more money in your account or less. I don't know, depending on how you trade. But there is a time where you're going to excel if you take it seriously. And you just got to wait. You just got to be patient. Like, I wish Grittani told me in 2016, like, Huddy, like, calm the F down and just wait. Like, you're going to get it. Just have perspective. And, here I am, years later having 200K months, right? So like, again, it's perspective, right? And keeping that in mind that like the market's not going anywhere. So if you're not mentally correct, if you're not trading correct, whatever's going on, like you don't need to be the best version of yourself every day. But when it's time to be the best, you got to actually put in the work and get there. Good question. Did you guys ever use trade journals to log trades or see trends? Dom, I know you did some, I know you like to journal at night.
Yeah, no, that's kind of where everything really shifted for me. Like I said, it took me too long, 5 or 6 months of really not writing anything down. I think that's the biggest thing you can do as a beginner is write down like your plan, like as if you're making a watch list, like your plan, your expected outcome, and like what you want to do with the trade. I used to have a spreadsheet, and it was very simple. It just kind of like I wrote the pattern I was playing, the P&L, like entry, exit, and then like a box that was like, did I stick to my plan? If I had not cut randomly, would it have worked out? And I feel like getting all that information down and like being able to go over it is really easy to identify strengths. I think behind the scenes of a lot of newbies who are struggling is a profitable trader. They just don't know it and don't see it because they're doing so much nonsense that it completely overshadows what they're doing properly and what they're doing right. And like what I was saying, you only need one pattern. You only need one strategy to make you money in the market. Like you could probably make $100,000 trading one pattern and without risking a ton of money. But people want to trade so often, they want to trade so many patterns that they lose all the money they're making on that one pattern that's working. So I think tracking, like even just really simple stuff by strategy, by P&L, by sticking to your plan, and figure out what the first goal as a beginner should be identify what you're good at, and then cut everything else out until that has figured out and mastered and is making you money.
Cool. Let me go through the questions. Can you give us an example of your gap down rip type of play? I honestly haven't seen many. Well, maybe you know of one or two.
Not recently. What's a good recent one? Not sure.
I really haven't seen any recently that screams like a roll
that have like really met the criteria. I haven't seen one like over the last couple of weeks or so.
Oh, maybe in the future you'll come on again and we'll have some to talk about.
No, I'll definitely come on again.
If/when we see a multi-month bear market, i.e. 2008, do you have a favorite setups? Have you back tested? Honestly, Plow Guy, I can tell you right now that Roland and myself and Dom were not traders in 2008. And even if we were traders in 2008, like I hardly call that a long-term, yeah, you said multi-month bear market. Yeah, maybe it was. We haven't traded, given what the market's done since 2009, we haven't traded really a long-term bear market, a multi-year bear market. So we can't really talk about like what we haven't really back tested. We just, kind of go with what's been working, and considering the market's been the same for the past 9 years, just constantly going up. The strategies that we have employed are kind of fit for that kind of macro condition. And when the markets change and actually we go on a multi-year bear market, it will be interesting. I honestly have no idea what that will look like. So that's kind of like, invest in your education and do as well as you can in the moment. And then again, like I'm a little scared for a bear market. I really have no idea what to expect for years and years and years of new lows on the S&P 500. I don't know if that changes the patterns. I don't know if there's less spikeability. I don't know. I honestly haven't traded. It feels like since the 1990s that really has happened, maybe 2000s. So we'll see. I honestly have no expectation, just kind of living in the moment. Sounds cheesy, but just, what I can do now works.
Well, for me, for things out of my control that I can't do anything about, I try not to worry about and stress about. I don't get excited about a bear market. I don't get upset about it because like I can't prepare for it right now because I don't know what it looks like. And, I don't know when that's going to be. So why stress about something that, I don't have any control over and can't do anything about?
What, a bear market?
Yeah.
I mean, we did have the biggest, fastest crash in the history of the market last year. It wasn't a sustained bear market, but that was the biggest crash in the history of the market.
Yeah.
That happened last year. Yeah. What I saw was like so much opportunity. It wasn't even fun. I missed out on like the long termers. I don't know why I didn't at the time. I think I was so busy day trading. There were so many tickers, like the Corona tickers, all those that were popping at the time while the markets were getting crushed. Like the Corona tickers were going nuts. Huh?
Remember the halt down days where the S&P 500 was circuit breaking?
Dude, it was circuit breaking down. And meanwhile, as we had like NNBC, like all Codex, all those weird, like all the Corona stocks were just like every day. APT, AHPI.
Yeah, it's hard to not, like, you remember these stocks, like they become part of us, honestly, especially when you do really well in the stock or really poorly. You never forget it.
Poorly.
All right, Roland, would you have traded INDP today? Where would be your entry? It's always interesting, the hindsight question.
Yeah, I can tell you in hindsight, in real time, no, this is not what I trade. It's just not. I mean, it makes sense from the perspective that the pattern wise and the fact that this is the pattern that's been running lately. Like I was saying earlier, a chart with not a lot of history on it, and then some news and gapping up. And the first day it's like doing big volume. So the issue for me is that you get a gap up from 7. By the time we got to market open, it's already gapping at 12. To me, it just is too much risk. Like even if I'm taking 1,000 shares or something, like it can snap real quick. That's not for me. Something that spikes right out the gate is already up from $7 to $12 and then 13. I mean, yeah, it went to $20. That does not bother me at all. Seeing this happen, like I get zero FOMO from this because it's not something I would trade anyways. So it's like you said, hindsight trading. In hindsight, oh, I should have done this. I should have done this. Well, why didn't you do it? Because in real time, you didn't see it. You know what I mean? Right. And that's, and so like in hindsight, I can tell you, I didn't trade it, and I wouldn't have traded it, and I didn't trade it. Just watching.
Makes
right?
sense.
Makes sense.
So guys, we're all going to wrap it up relatively soon. We've gone about an hour and a half. If you guys did like the information that we talked about today, we do this twice a week on a thing called Stock Therapy Elite. You can sign up through my Twitter. There's multiple avenues where we post about it. Again, it's just, Dom and myself going through charts, talking through our emotional and our mental problems. It's, and then hopefully dropping some nuggets of information along the way. Like when we start talking about, risk management, risk rewards, setups, entries, that stuff does come out. Look, we love to talk charts. We love to talk stocks. We love to talk entries, exits, losses, gains, all of that. Again, in order to be really successful, I do think you have to obsess. So we do have like a week trial right now. It's $5 to get in. We just want to give you guys a taste. If you like it, great, sign up for it. If you hate it, leave. That's on your own. Like this is just, the education that we had in our mind that we wanted to put out there, because we know that we've been doing this for 6 years, and we know that we're, not necessarily bad at this. We're actually part of the top 10% of traders, and we love helping. I know like Dom teaches his family how to trade, I know Roland is waiting to get his kids into trading. And I,
Oh,
I just like to talk.
my son, Roman, he literally said that that's what he wants to do for a living after he plays soccer. I'm like, all right. He said no. He said he's gonna start trading. Like he asked when he can start. I'm like, anytime you want, buddy.
It's because who wouldn't want to be like Roland Wolf? Soccer career to trading stocks. I mean, that's pretty badass. I mean, yeah. Of a trajectory. But yeah, we've been going for an hour and a half. I'm sure all of your voices are as gone as mine. So we're gonna wrap it up. But if you guys do want more info, definitely reach out on Twitter or whatever it is. And we're looking forward to doing this again. We're doing this again in 2 weeks. Jack Kellogg will be on, most likely. And, all these guys are our friends. I'm really appreciative of you, Roland, coming on. Please, everyone, thank Roland. He didn't have to do this. He doesn't get paid. He's just a friend and a longtime friend and a good person. And again, thank you so much for coming on and sharing your wisdom. I know that
no problem, man.
Everyone learned from you today.
Yeah, love you guys. Miss you guys.
Miss
you too, bro. Tom, you're beautiful.
Care,
thank you. All right, guys. I think the next one is Friday for us. So we will see you over at Stock Therapy Elite. And happy trading.